What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover everything related to stocks and investing. In this video, we're going to go over some of the greatest trades on the Wallstreetbets forum over the past week so we can learn from other traders' experiences. First off, we have user Keen Feed, who shared some hardcore loss porn of his portfolio decreasing in value by more than $150,000, mostly from calls on Gamestop and EV stocks. He shares a screenshot of his positions showing numerous call options on Gamestop, Apple, Afria, and NIO. In total, he has more than 13 call option positions, all of which are in the red, with losses ranging from negative 10% for this Afria April 16th call to 99.96% loss for this GameStop February 26th call. In his post, he says he lost more than $150,000, and if you add up the losses on all the positions, it adds up to almost $200,000 of losses. The majority of them came from GameStop, which accounted for $143,000, followed by NIO, which accounted for about $39,000. This is a truly sad loss for the OP. It took him years to build up the savings for these YOLOs, and the money was originally supposed to go to building his first house. This was a true YOLO for him, and now he is left with no house and no wife, and only $11,000 left in his account. Many fellow Wallstreetbets users are sympathetic and encourage the OP to look at the bigger picture. While losing $200,000 is surely gut-wrenching, it's important to keep in mind that we enter this world with nothing, and at the end of the day, when we enter the shadow of the valley of death, we will take nothing with us as we enter the next realm. Our lives take unique paths, but whether you are rich or poor, our paths will ultimately end at the same destination. Next up, we have user DarkLights973, who posted a screenshot of his AMC call position up a whopping 29,000%, or $29,000 on the morning of January 27th. He bought 10 contracts of $9 strike calls for 10 cents each, so he put in $100 into 1,000 call options on this investment. On that morning, AMC opened up 300%, jumping from $5 to $20 a share overnight. His calls were about 50% out of the money before that morning, but more than 100% in the money by market open. With AMC at $20 a share, there was $11 of intrinsic value in each option, which is how much profit you would make if you were to exercise the option at that very moment. One person in the comments asked how it's possible to have an option that is worth more than the stock price itself. The answer is because of the extreme volatility of AMC, it was very possible that it could keep going up even further before expiry with unlimited gains. Although it could just as easily go down, if it went back down below the strike price, the losses would be capped by the construction of an option. So this added another $18 of time value to the option. At this moment, the OP sold some of his options, because in order for him to have benefited from holding, the stock would have had to go to $38 a share at expiry. Basically, he realized that the time value of the option was inflated, and that he'd be losing more than half of his value to Theta if he held. Since then, AMC has given up most of its gains. It now trades about $5.70 a share, 70% below its closing price on January 27th. This is about in line with where the stock price was at for most of 2020, unlike GameStop, which seems to have had a permanent increase in price due to the short squeeze. Next up, we have user Tesla BMW 6 with another screenshot from the glory days of the short squeeze. He went all in on GameStop for 200 shares, which made up 100% of his portfolio diversity. At the time of this screenshot, GameStop shares were at $445, so he was up $75,000 for 519% returns on his $15,000 investment. Unfortunately, GameStop failed to hold on to the majority of those gains, thanks to certain actors behind the scenes. They now trade around $40 to $50 a share, which, while significantly higher than where they were 6 months ago, is significantly below the OP's $70 cost basis. User Love and Thunder Muffin says that the title "It Felt Good" hits hard, because for those couple of days, the glory of Wallstreetbets felt kingly. For those that didn't sell, however, it only lasted for those few days. Next off, we have user Accomplished Bit, who shares a screenshot of his portfolio showing large losses on AMC, BlackBerry, Castor Maritime, GameStop, and Patriot One Technologies. The OP hails from Sweden and says he will see his fellow Swedish degenerates in Valhalla. Some users are interested in the currency he used to buy the shares, which are labeled Belop on his account. Some users speculate that this is a new digital currency, but it turns out it is just a Swedish currency. Of the OP's 5 positions, 3 of them are well known in meme stocks: AMC, BlackBerry, and GameStop. But he also holds positions in 2 little-known penny stocks, Castor Maritime and Patriot One Technologies. Castor Maritime is a global shipping company that engages in seaborne transportation of a wide range of dry bulk commodities along worldwide shipping routes through its dry bulk vessels. Unfortunately for the OP, he bought into these stocks years ago and has been bag holding for a long time as they have underperformed the market. On the positive note, despite his large trading losses, the OP won't have to worry about putting food on the table, because Sweden has one of the most generous welfare states on the planet. We wish you luck on your future plays. Next up, we have some nice gains on a long-dated call option play on Wells Fargo. This user held $8,000 of 40 strike calls on Wells Fargo expiring in January of next year. He bought them in late October 2020, along with some long-dated calls on XLF Spider Financials ETF. The XLF has since gained more than 30%, and Wells Fargo has gained more than 75%. Even though Wells Fargo calls are still 10% out of the money, because the OP used long-dated options, they have still made money so far. He is taking advantage of the LEAP strategy, where you use options to essentially gain leverage on a long-term investment rather than speculate on short-term weeklies. With LEAPs, you reduce the amount of theta decay your options are exposed to. Because of the long-dated expiry, the OP's investment thesis that Wells Fargo is undervalued was able to make him money, because as long as the stock goes up at some point in the following year after he bought the calls, he makes money. Wells Fargo has been doing well recently due to a combination of increasing interest rates as well as speculation that the Fed is close to lifting the asset cap it imposed on the company several years ago, among other restrictions. If this happens, Wells Fargo could increase the size of its operations significantly, as well as possibly bring back its old share buyback and dividend growth programs. However, if the Fed decides not to, or interest rates stop increasing, Wells Fargo's operations could be in for more pain in the years ahead. Next up, we have user Saint of Fury, whose portfolio has significantly underperformed the Dow Jones Industrial Average since the beginning of the pandemic. Over the past 365 days, the Dow has increased in value by 11%. During that same period, the OP's account has decreased in value by 93%. His portfolio was not well positioned going into the pandemic, as he owned boomer stocks including ExxonMobil, Occidental Petroleum, Carnival Cruise Lines, and American Airlines. He sold out of his stock positions after the first dip, but then converted to calls on the same stocks. Unfortunately, the stocks continued to fall as oil prices briefly turned negative, and air travel was severely impaired. Consequently, most of his calls expired worthless, and he lost almost his entire portfolio value. To add insult to injury, a lot of these stocks started to rebound strongly after his calls expired. Had he waited another month to buy into them, he could have actually massively outperformed the market. And now, with the vaccine starting to be distributed, there is much optimism around the reopening stocks as many investors expect a return to normalcy in 2021. And despite his poor performance in 2020, the OP is not giving up. He points out that if you zoom into the chart and just look at his performance in 2021, he's actually doing pretty well, although it will take him a long time to make back his 93% loss. We wish you luck on your future plays. Alright guys, that wraps it up for this video. If you like the content, make sure to leave a like and subscribe to the channel so you don't miss future videos. Also be sure to follow us on TikTok and Instagram. If you have any recent gains or losses, let us know about them in the comments section below. Also, if you like animal videos such as compilations of the most epic raptor attacks on humans and other animals, check out our new channel, link in the description below. It's called Epic Animal Videos, and we're trying to make it a channel for compilations of all the best videos of animals in the wild on the internet, all in one place and easy to watch videos. If you love watching epic animal videos like I do, but find it difficult to sort out the good ones from the bad ones, you'll like what we're trying to do in this channel. In the meantime, thank you guys so much for watching, and we'll see you in the next video. Wall Street Millennial, signing out.